Hi, my name is Nur Ali binti Aziz and my matric number is 289756. The operating cycle of the company being the average period the company must manage the cash flow between the period of account receivable. Therefore, every company should manage its operating cycle of accounting receivable to regulate the cash inflow in the business. A shorter average collection period, 60 days or less, is generally preferable and means a business has higher liquidity. For Seng, in 2017 until 2021 has less than 60 days. This shows that Seng has a good account receivable period. The good account receivable for Seng is in 2020 because the days are short compared to other years. A shorter operating cycle is more favorable. For Seng Industri Berhad in 2017 until 2021 has less than 100 days. This is to show the company has enough cash to maintain operation. The good operating cycle for Seng is also in 2020 because it takes a short time for a company to turn its inventories into cash. Thank you.
From the table of operating cycle, we can see that in 5 years, year 2020 shows 82.7 days, which is the small figure or shortest days in operating cycle. Meanwhile, in 2017, it shows the largest figure or longest days in operating cycle. A longer operating cycles indicate it takes longer time for a company to turn purchases into cash through sales. A shorter operating cycle indicates that a company's cash is tied up for a shorter period of time, which is generally more ideal from a cash flow perspective.
My name is Nur Faiza binti Ruspandi, matric number 285128, and I will make a presentation on the cash conversion cycle. The cash conversion cycle, often known as the cash cycle, is a working capital indicator that calculates the time it takes a company to turn raw materials into cash. The shorter a company's cash conversion cycle, the less time cash is held in accounts receivables and inventories. While the cash conversion cycle is usually a positive figure, some companies may have a negative cash conversion cycle, just like our chosen company, Seng Industries Berhad. As we can see from the table above, Seng has a negative cash conversion cycle from 2017 until 2021. In this situation, the company effectively receiving payments for the goods it sells before paying its suppliers for materials. This can be achieved through a combination of selling inventory rapidly, collecting payment from customers promptly, and also paying the company's suppliers at a later date. One of the reasons Seng has a negative cash conversion cycle is because the company has a high accounts payables period. Seng has the highest account payables period during 2017, which is 100 days. This indicates that the company needs 100 days in order to pay its suppliers company. Generally, having a high payables period is advantageous because it means that the company has extra cash on hand that could be used for short-term investments. Besides, it also means that the business has favorable terms with its suppliers company. However, high account payables period also can be indicate that the company is unable to pay their bills on time.
From the table of cash cycle, we can see that in 5 years, 2020 shows negative 8.55 days, which means the longest period of time, while in 2018 shows negative 3.6 days, meaning the shortest periods of time. A longer cash cycle means it takes longer time to generate cash. Meanwhile, the shortest cash cycles indicates that a company has more reliable access to cash on hand and more opportunities to use that cash to further the business. So the shorter cash cycle is the better because shorter cycle means cash is moving faster through your business.
Hi everyone, my name is Narfara Ashikin binti Sharnizam, my matric number 280478, and today I will explain about working capital finance. What is working capital finance? Working capital financing is when a business borrows money to cover day-to-day operation and payroll rather than purchasing equipment or investment. Working capital financing is a common practice for businesses with an inconsistent cash flow. Below is the types of working capital finance that offers by Maybank. We suggest these three types of working capital finance to help Seng company. The first one is invoice financing, second one is trade financing, and third SME clean loan financing I. The first one is invoice financing. Invoice financing is an accounting method that lets business borrow against their account receivable to generate cash quickly. Invoice factoring is appropriate for companies that sell tangible services or goods. It is often used by businesses that have a significant amount of operational cash locked up with creditors. Therefore, invoice factoring helps firms gather the funds necessary to fulfill consumer purchase orders. Sale invoices are the key collateral for cash flow loans. Second one, invoice financing also enables a business to use money owed to it by customers to fund corporate expansion or meet day-to-day financial obligation. The last one, it's easy to use and takes minimal administration, and the corporation maintains complete control over customer payments and credit controls. The second type is trade finance. Trade finance represents the financial instrument and products that are used by companies to facilitate international trade and commerce. Trade finance makes it possible and easier for importers and exporters to transact business through trade. Trade finance allows companies to mitigate the risk associated with importing or exporting goods and services, permitting world trade to flow in a predictable, secure manner. The benefit is trade finance introduces a third party into a transaction between a buyer and a seller. The seller can maintain working capital through invoice financing and guarantee they will receive payment, while the buyer can fund the purchase of goods and ensure they are shipped before payment is released. The last type is SME. What is SME? SME is a small and medium enterprises that play a major role in most economies, particularly in developing countries. SMEs account for the majority of businesses worldwide and are important contributors to job creation and global economic development. The details about SMEs, a term loan or commodity murabahah term financing I, or called SMTFI. Financing amount is about RM10,000 to 1.5 million up to 250,000 for online application. The repayment tenure is up to 7 years and 5 years for online application, and there is no collateral required to apply this. As conclusion, we think the most suitable working capital finance for Seng company is invoice financing because it's a quicker way to obtain the financing.
Hi, my name is Nur Syafiqah binti Zaini and my matric number is 284484, and I will make a presentation about the document required in applying working capital finance. Seng industry choose invoice factoring, so there is several documents need to be prepared. The first document is factoring application. Before Seng industry consider approaching a factor with the intention of obtaining invoice factoring, the company must first earn the factor confidence. The application will inquiry the company's name, short description about the company's name and percentage of any shareholders, and other similar information particular that will assist factoring in reviewing the company credibility as a corporation. The second document is list name of customer. The factor want to know at least the minimum necessary about the customer and their creditworthiness. The third document, which is corporate tax return and financial statement. If the factor company asks information about the company finance, the company need to be well prepared the best financial interest by giving the factor the full audit and the accounting balance firm. The last document is any current license agreement. The factor will ask for copy of any license agreement that the company already has to make sure that the company doesn't break any license and to make sure the product value of the company doesn't go down because of it. That's all from our group. Thank you. Next, I will explain about the document required for applying SME financing. The first and foremost document, which is business registration document that include all the important information about the company. Second document, which is NRIC. NRIC is a National Registration Identification Number of Director, Shareholder, Owner, Partner and Guarantor. Next, the third document is latest 6-month bank statement. A bank statement is a summarize all of the transaction during the previous month. Last but not least, trading license. This document necessary for company that doing activities such as distribute product in the local market. Second type of working capital, which is trade financing. Here is the several document required. Firstly, application document. Second, 2 or 5 years of financing statement that including a profit and loss. Third document is company asset. Any asset of company owned. This asset may serve as collateral. Lastly, current invoice. Bank may review company business transaction using this invoice as a supporting document.